This lecture gives an introduction to what exchange traded funds are. ETFs are like mutual funds which can be traded on the stock exchange. Unlike mutual funds where prices are determined once daily, the prices of ETFs are determined throughout the day with the mechanism of supply and demand. In essence, ETFs are like stocks and you can apply most of the operations of stock like shorting, writing options, use of derivatives, managing stop loss and stop buy orders, etc. Throughout the day, there will be fluctuations between the actual value of the ETFs and the underlying securities, but these will be minor and short lived as ETF can be exchanged in kind. They can exchange ETFs shares for the actual stocks or bonds in the ETF portfolio. ETFs provide a quick way toward diversification. This also leads to transparency and quick access to securities which were previously available to institutional investors only. Another attractive features of ETFs are tax efficiency and relative ease to buy or sell ETFs using online brokerage. It is rather difficult to buy sell mutual funds in particular due to back-end load charges. In case of ETFs, MERs and other expenses are much less as compared to the ETFs. This feature makes ETFs as a much attractive proposition as compared to mutual funds. One aspect of tax efficiency is that ETFs can sidestep capital gains using in kind redemptions. Generally speaking, the higher the fund's turnover ratio, the greater probability that it will post capital gains. ETFs will have bid ask spread like any stock traded on the exchange. The bid ask spread will widen in more thinly traded ETFs. The key advantage of ETFs is that these mitigate risks by providing low cost exposure to a series of stocks. ETF's costs must be considered beyond an ETF expense ratio. In addition, there are transaction costs such as brokerage commissions and bid ask spreads. ETFs can be constructed in a number of ways. Some ETFs can span across the entire stock or bond market. ETFs can weight securities based off market capitalization or equity weighting index.